Vinit Bolinjkar as well. He's joining us in the show. Vinit, you track this one closely. Trent, I know you very much do, and I'll come to that. But Tata Communications?
No, we don't track it very closely, but I can give you my sense as Nikuj pointed out, there's definitely a transition of revenue happening. So, when you have a high margin business coming in place of a low margin, very high revenue kind of turnover falling down, there is the EBITDA tends to be sticky while the revenues are falling. However, as he's quite rightly pointed out, that the debt is for concern, and I need to delve more in that before I can comment anything on that.
16. The other one is Trent. And Vinith, it's a great company, great franchise. Their stores are doing very well. They are, crushing it when it comes to occupying that mid-market, high-fashion brand. But the P multiple of Trent is wacky. 50, 60 times. They're depending on the most, even this is the most conservative estimate. I've not looked at today's 6% change. It'll make it even higher. Why is anybody buying Trent?
It's purely the dominance of the sector. That's all I can say at this point in time. I definitely do agree with you that the valuations are slightly on the higher side. But definitely, as we have seen, when demand grew, the dominance took the trade to stratospheric levels. And from there, when the slowdown came, the stock got hammered down. But right now, Trent is in a very sweet spot. They've got all the micro markets and the price trend bands very well taken up, and we are seeing tremendous growth coming. So all brands firing on cylinders, and store expansions are on a blitzkrieg. And we believe that it's just a momentum play. Play with the momentum, but always remember that the valuations are slightly out of whack right now.
1685 for Trent. They also are in a JV with Zara Intex, I think is the company. Inditex, sorry. Yeah. Thank you, Anisha. Inditex, it's Zara and 50% JV. So every time you see a Zara shopping bag, remember the money indirectly is moving into the balance sheet of Trent. And Trent, if you don't know, is actually owned by Tatas. We don't talk about this piece at all. But in this entire rally, Vinith, a no-brainer stock called HDFC Bank has not participated. FIs have come back. DIs are bullish. Vinith is bullish. Kunal is technically excited. But this stock just does not go higher.
It's just a wait a while for the merger to get through, and that is when you will see the bullishness come back in the stock. But having said that, we also need to see all the sectoral leaders are also under pressure. You see Reliance not moving much. You talk of SBI, ICICI Security, ICICI Bank very stagnant. So ITC, after hitting 450, it's been kind of on a pause. So with all the heavyweights of the index are holding it up, while the rest of the index is pulling it up, and it is the entire rally that has taken place right now is more broad-based without the market leaders, and that really talks about the breadth of the entire segment. And what I believe is that once the merger is formalized, formally both the companies are amalgamated, I think we will see the re-rating process start taking place in HDFC Bank.
Are those re-rating candidates on account of merger, and the other merger that the street is watching out for is Z Entertainment, but that's been getting kicked down the road for quite a while now. And the latest, of course, coming in from SEBI, wherein they have barred Punit Goenka as well as Subhash Chandra from holding the directorial position for the next 1 year at least. And we brought you the latest on that story that Mr. Punit Goenka, they have reached out to SAT as well, and the hearing is expected on Thursday, and then the NCLT hearing is lined up on June 16. So that's the stock which, of course, has recovered quite a bit on an intraday basis, had opened with a cut of around 5%. And the other one that we are tracking today is MRF. That's managed to hit that coveted 1 lakh mark. This is the most expensive stock per se in an absolute value term when it comes to MRF, and what a stellar journey has been for MRF. And the 30-year stock CAGR lands up at a whopping 18%.
The developers called me in the morning, sir, there's error of the software. We've never seen a 6-digit tick on a single stock. I said, no, it's not an error. The stock's actually gone to 1 lakh. Do you know that this company has grown without raising capital?
Really?
They've not raised capital. We don't realize it.
Except IPO, nothing else at all?
They've not raised capital.
Interesting.
We don't realize it. I mean, we don't realize that HCL's been diluting, Apollo has been diluting, they're going left, right and center. The management rarely talks.
Yeah.
I've never met them also. I mean, one of the rare managements I've not met them. I just had a chance of meeting the professional CEO once, that too at an event. And that's been my only interaction with MRF. And just amazes me, right?
Kush, we have seen a CAGR of 18%. Amazing is the word, as Nikunj pointed out. Where do you see the charts headed for MRF?
Thankfully, our systems are still showing those big numbers, and I hope they continue to grow. Well, if we just look at it purely technically, then yes, there is a very clear breakout that, we've had about the 99,200 mark. I don't see this rally stopping anytime soon. In fact, if we see after this mark was hit, even today, there's a slight uptick in the volumes as well. So I won't be surprised, if it goes to those, 11,000 odd, or rather 110,000 odd kind of, targets in the coming months' time. On the downside, I would say, 99,200 is where I would place my stop loss. But yeah, this is more of an, a positional bet. This is not a retail play at all. So yeah, you can still enter this and hold this for the long term. Short. I mean, looks like not short, but yeah, you know what I mean, right? I mean, the only trajectory is up.
Vinit, what has differentiated MRF from others? Like I was, discussing with Anisha, they've grown without raising capital. And it's a tough business. Tire business is a business which is highly dependent on carbon black, rubber, demand and cyclicality. Yet this one has hit out of the park. Vinit, MRF. I mean, why has MRF managed to hit out of the park when there is an example of CM and Apollo?
So it's the brand value, absolutely. If you've seen, they were the early guys to hit the cricket bandwagon. They really build up the brand, and the brand is very, very strong. Of course, you got a very stellar management, not diluted ever, and just goes on performing really well. So I believe it's more of a brand story than anything else. Having said that, although it has been an 18% CAGR over 30 years, over the last few years, the run-up has not been that, the growth rate has not been that exciting. It's definitely a statistical number. 1 lakh is something to talk about. But I believe there are much more better stories in the market which can really play out much better. So it's more of a statistical number for me right now than anything else.
You say, look, I'm going to buy and I will hold. Doesn't matter what happens to the 2024 election cycle. I don't care about geopolitical concerns. I don't care about dollar index. I'm just going to sit on it for 5, 7, 10 years, which is at one stock or maybe 2 or maybe 3.
So for me, for the next 5 years, is going to be Maruti, HDFC Bank.
अरे भाई मल्टीबैगर बताओ ना विनीत भाई, ये तो पुराना है, जूना नाम है.
So I think you go with the stocks which appeal to you the most. I think Maruti is reshaping its own business. They're going to have 5 to 6 new EV models lined up from 26. They have increased their market share from 6 to 12 in the SUV space. They're confident of doing 25% this year itself, right? So so their average selling price of a car is going up. They're slowly disbanding the name of a small car tag, right? And the funny thing is that in the small car segment, they own almost a dominant share. And when EVs start hitting the market, there is no other brand there to replace these guys. So, on a conservative basis, we are seeing the stock go up 50% over the next 2 years. And when the EV portfolio starts contributing to the top line, I think we are going to see some more firecrackers take place in the stock.
5 years of stock, you say I will not care about what happens to the technicals, I will not look at head and shoulder patterns, I will not look at 200 DMA, I will simply hold it.
There are so many of them.
Tata Motors, Indocent.
Tata Motors, Indocent, AB
5 years
Capital,
you happy to own them.
AB Capital, DLF, Anantraj.
One.
Anantraj.
No, one name.
That's why I said restricting to one is very difficult. I'll probably believe that if you ask me fresh, I mean at current levels, if you're asking me that, probably AB Capital would be the stock which I would look to buy.
Okay.
And hold.
Kush, which is that one stock where you would say, look, I'll be patient. I'll be patient for next couple of years.
So if I can, let me give you two. One is Bajaj Finance. It's off its highs, recovering. Even though there are questions around this, around its story. I don't think this is done and dusted. I think there is still a long way to go for Bajaj Finance to move from here. And the other, a very less discussed stock is EPL. If I look at the charts, it's a very clear breakout that we've seen some time ago, and there's a consolidation happening now. But I think it's gearing up for a very big move. So I think EPL is something that I would have on my radar. So yeah, there, a bit greedy, but yeah, give you two.
Kush, but the other ones that I wanted to highlight, and since we were talking about EV and Vinit was talking about the entire transition as well, two stocks which are in EV bus space have been doing quite well, and both are sitting at all-time high levels. Electra Green Tech, that stock has been of course on a tear, and JBM Auto 2, and maybe we can pull up a monthly chart of these two counters to see how they're faring, or even a YTD chart, because both of these counters have seen a solid up move. Kush, do you track either of these names, Electra Green Tech, JBM Auto?
Incidentally, I do both of them, and they've been on my buy radar, and I've recommended both of them, in fact, a couple of times. Now the kind of move that we've seen has obviously, from a technical standpoint, put them in an overbought territory. So I wouldn't rule out some sort of profit booking. In fact, Electra, if I see today 940 is the high, it's off its highs, so it'll be a good idea to buy it slightly lower, somewhere around 850, 825 zones. But yeah, as I said, the kind of momentum that we've seen, volumes, we've seen pick up. The trajectory is upwards. Just that fresh buying at these levels will not keep your risk reward ratio as favorable. But on the whole, I wouldn't rule out 1,050 kind of moves on this one. So that's Electra. As far as JBM Auto goes, the entire auto ancillary pack had been doing fantastically well even before the auto manufacturers started moving up, and JBM Auto was at the forefront. But a similar story here, the kind of breakout that we've seen has put it, in the overbought territory. So again, any dip to 925 levels would make it attractive. The risk reward ratio will be that much more attractive. 875 would be my stop loss. Again, similar 1,050, 1,100 kind of targets on this one as well. Both are great buys. At dips, the risk reward ratio will be more favorable.
Okay, risk reward ratio will be favorable. Scanning through stocks now, and Vinit, I'll take my chances with this one. We normally don't discuss Suzlon, but the run-up in the stock has been so swift that we cannot ignore it for long. There is a news, there is a buzz, and there is a change of guard there. Suzlon, where is this one headed, Vinit?
I think one of the most significant takeaways for me from this stock is the fact that, they have kind of retired debt to a substantial extent and bought it well within norms of normal business course. And that portends to be very strongly given the fact that, Suzlon has a very broad-based experience in terms of doing renewable energy. And, over the next 6 to 7 years, if we are going to take our 400 gigawatts to 950, with the bulk of them coming only from renewables, then, Suzlon will definitely be a part of that growth story. So a new guard in place, a debt pared back to decent levels, and perfect scenario of a industry background having extremely high growth and completely supported by the government. So that's the magic that is playing out for Suzlon, and this stock can continue to rally. It's early days for this stock right now.
Go to 50 in 3 years? Could it be 100 in 5 years? Because this is one space where we know that everybody is trying to expand.
Yeah, it could. It could definitely. So the way we've seen the Electras and the Electra Greens play out, why can't this stock either even do the same thing?
Suzlon?
Well, I would not be too much bullish on the stock, but I think yes, the breakout is quite strong, prominent this last 2-3. So over the last 6-8 months, the stock was setting up for a breakout. It was just a matter of time that it would come out of a consolidation. I think it was forming a bullish flag pennant kind of a combination pattern, and the breakout is around 9.9, 10.2 for Suzlon. And the moment the stock has broken over the last, I think 3-4 weeks, the stock has gained some 30 to 40%. So I would believe that this was more of an impending breakout over the last 6-7 months. Maybe another upside of 3-4 rupees for the stock price. That's the best which I can probably spot over the near term. So I would probably keep this as a more of a trading bet rather than more of a long term.
Oh, well, yes, that 80% move in a matter of 1 month is not something that you should take lightly. So hedge your bets and tread very carefully when it comes to Suzlon. But what are the other news flow and what's the dealing room chatter like? Let's go across to my colleague Sharad. He's been picking up some exclusive tidbits when it comes to Alky Amines. What is the story and what's happening is this counter, Sharad?
Well, yes, in focus we are having Alky Amines with the volumes coming at almost 5 times its 20-day average and strong accumulation coming from the HNI segment. Now do remember that the long-term selling pressure was there and that has actually come down from the month of March itself where the stock has seen a small rally. Apart from this, on the overall basis, the stock is still down by more than 40% from its high seen in 2021. Apart from this, there are certain big investors also such as Norges Bank, Vanguard and BlackRock and also L&T Mutual Fund who are actually invested in the company as well, but in quantities below the 1% stake mark. Apart from this, looking at the key triggers going ahead for the company, and this includes the capacity expansion of the ethyl Amines plant, and that is expected to get commissioned next month, so that is something which the street will be factoring in. But do remember the supply chain issues still persist, especially for the utilizations which is impacting the AC and plants as well. But on the other hand, the long-term guidance still remains between 10 to 15% of the volume growth that is coming in from the management commentary, and 2 important triggers as well, that 4 products are expected to be commissioned over the next 24 months and the entry into the specialty products is expected to augur well, especially on the margin front.
Okay, so that was about the dealing room chatter. Quickly, let's take stock of the frontline index itself, because while Nifty has been seeing a bit of a spike, it's a bank Nifty which is doing now quite a bit of move. In fact, the Nifty bank has jumped almost 100-200 points. Yes, in the last few minutes itself, that's seen a rally of over 100 points in the last 5-7 minutes. So it's IDFC First Bank which is up a good 3%. Axis Bank is rallying. You also have ICICI Bank which has managed to reverse. It was earlier trading in the red line, now moved comfortably in the green, 1% higher as far as ICICI Bank goes, though Kotak Mahindra Bank is a rank underperformer and continues to be on the back foot. We'll try and decode more about the banking space, but before we do that, let me take the BTST ideas from our technical experts. Kush, you go first. What's the buy today, sell tomorrow idea?
So, 2 of them. One stock, that's looking good on the charts is Indian Hotels. Again, we've seen a bit of a downturn, but the 20-day moving average has been a support zone, and the stocks, rebounded from there. So 397 and 402 are the targets that I'd play for. 388, where I would keep, where I would keep my stop loss. One stock from the cash segment that is showing, a very clear breakout after consolidation is Wokhard. Now, we've seen a very nice volume-backed move on this one, and today we've seen a breakout about above those 180 kind of resistance zones. So this move could continue to 190 and 199 levels. 178 is where I would place my stop loss.
Okay, so those are the top ideas coming in from Kush Bora. But Kunal Bothra, what about you?
So 2 buy calls on the cash side on the mid-cap end. First one is about Arvind. The stock looks attractive, broken past about the previous resistance of 130. So buy with a target of 140, stop loss at 128. And Ujjivan has been doing exceptionally well over the last 2 to 3 months. So that's a stock which I think at 397.8 looks attractive for a target of 415, stop loss at 385.
Kunal, just a while ago we were talking about the banking names, right? The big move that we are seeing in the entire banking index, ICICI Bank, IDFC First Bank, while Kotak Mahindra Bank is in the red. Would you take a bet on any of the names? Is ICICI Bank something that you're watching out for? Is Nifty Bank finally out of the consolidation?
Yeah, I think if ICICI Bank manages to show maybe one more round of outperformance, then I think we can probably bet that the banking index is ending its consolidation. So as I said earlier, that we were looking out for just 2 or 3 of the larger cap names to try and show signs of a breakout of their consolidation, whether it's ICICI Bank, HDFC Bank, and I think Kotak Bank. So whichever other 2 or 3 names which can come out of the consolidation, that would probably be a sign that the Bank Nifty is coming out of its consolidation. 44,500 on the Bank Nifty on the upside is the resistance. So we are still trading into a band for the Bank Nifty. And for ICICI Bank, the breakout would be at 960 mark. So I'll wait out for another percentage point for ICICI Bank to break out of those levels.
Nikunj, what do you think is wrong with Kotak Mahindra Bank? HDFC, we understand there's that impending merger. Kotak, that supply which people were worried about, also the block happened. So why not Kotak Mahindra Bank? Why is it not moving?
Anisha, typically when there's a change of guard, especially when you go hallmark leaders who've really created a champion franchise, and when the term is nearing an end, those stocks, they tend to underperform. I'll give you some examples here. HDFC Bank, nobody knew that who would take over, even though it was very clear that there would be an internal candidate who would take over from Mr. Puri, and it was very well structured. So I don't think there's a problem per se. But till the time, 6 months before the final name was announced, HDFC Bank started underperforming. I think Kotak also, the succession planning and the transition process would be extremely smooth. It's a cadre-driven organization. I get a sense that it's going to be an internal candidate, not an external candidate, because an internal candidate understands the risk, the culture, and the book quality. But till the time the cat is not out of the bag, which is the name of the candidate is not announced, it is not approved by Reserve Bank of India, I think the market in a sense will always be in this suspense mode, so to speak. There was a time when Kotak had poor liability franchise. I think that problem has been taken care of. And you're right that the supply overhang which also was there, I think it's got reduced. But my sense is purely based on what I've seen, 6 months before, when a great champion who was created in champion franchise, when his or her term is coming to an end, the stock always tends to outperform. Similarly, there are instances when the management change in a sense has led to re-rating of the stock. So case point here is Aditya Birla Capital. Aditya Srinivasan moves out, Vishakha Mule takes over, the stock goes from 110, 150. Chanda Kochar, unfortunate exit, first exit, Mr. Bakshi takes over, look at what happened. Another example where a federal bank, Sham takes over, complete change in terms of what happened to the franchise value. So in banking, it's a simple. I'm making a very long question answer here. But what is the bank business? Simple, borrowing and lending. Then why every bank has a different profitability, different ratio and different management style? That's largely because of the risk they take. Banking is a simple business. You borrow deposits, you get deposits, you give loans.
Advances.
But every bank has a different profit, different franchise, different technology. Those are decisions which you take based on your understanding of risk. And that is where I think the man at the top is perhaps the most important top person, because he gets a culture of risk and lending in the system.
Yeah, no, exactly the point, Vinit, that Nikunj is talking about. Would you use then this opportunity to buy into the counter? Because as he pointed out, the transition is going to be smooth. It's not that it's going to be very sudden or there'll be some boardroom tussle. It's going to be very, very smooth. So would you buy then?
I beg to differ here a bit, specifically to Kotak Bank. With more of the other parameters, I'm in consonance with Nikunj. If you see Kotak Bank, bulk of the lending was actually concentrated within the chief himself, right? So any amount about 25 crores was singularly sanctioned, approved, and disbursed as per the decisions of the chief himself. Now with the new guard coming in and the new guard kind of deciding on how the business will unfold and in the style in which it does it, that will depend. So, the risk control, which was so apt and so well keenly managed by Uday Kotak, can it be done by the new guard who comes in this place is the question. So you have to give him a little time to play out. And while we are contemplating how it will pan out, it makes more sense to go with the HDFC Bank or an ICICI. Of course, ICICI is very expensive now. The gap of the gap between the valuations of HDFC and ICICI Bank has gone away. In fact, ICICI is much more expensive than HDFC Bank.
Right.
And hence, I went to HDFC Bank because we've seen the thing happen, and now the is in place and they've demonstrated capability.
Sure, Vinit, sorry to interject, but we are just towards that last 30 seconds of the trading session. So I would interrupt you there because for now the market seems to be ending in a fine fettle. A 100-point gain coming in on the Nifty, comfortably above 18,700. The advance decline ratio is what is very impressive at this point of time. 1,300 stocks advancing to 850 declining. Sensex comfortably above 63,150. And it's a broader market yet again which have done the outperformance. So the mid-cap index and the small-cap index, they are the ones which are up over 1% in the trading session, and mid-cap index hitting fresh record high. Sectorally speaking, it was real estate that was doing quite well in the trading session. You also had the pharma pack, which was quite excited, and in FMCG names the likes of Tata Consumer, ITC, Dabur, they were in the focus. And apart from that, the paint names, of course, Asian Paints, Berger Paints on account of that crude decline, and Pidilite for that matter as well. You also saw some new age tech companies see a bit of bounce back. Case in point being PB Fintech, which was up 4% today yet again. You also had Lodha or Macrotech developers with a gain of 11%. Devyani International surged 8%. Tata Communications, what a field day that stock has really had. 8% higher, hitting a fresh 52-week high on an intraday basis. And talking about highs, All-time highs were seen on Electra Green Tech as well as JBM Auto. Both of those counters are going home with a gain of 5 to 10%. Z Entertainment was in focus on account of that entire SEBI matter coming in. Ended off the lowest point of the trading session, but nonetheless with a bit of a red tinge. And then KPIT Tech, which in the last half an hour or so saw a bit of selling pressure. And Indigo too has been having iffy days for the last couple of trading sessions. Today as well, a cut of 3% on Indigo, but all in all, it's a decent trading session coming in for the Indian markets, 18,720 for the Nifty, so not much to complain. But on that note, wrapping up this edition of Closing Trades, thank you so much for being with us.